In this video, I want to give you 3 moves that can single-handedly shave thousands, if not tens of thousands of dollars off your next tax bill. My name is Sherman the CPA, and I help business owners reduce their taxes every single day at mycpacoach.com. I get calls from clients up until the last day of the year on last-minute tactics and strategies to cut their taxes, and today I'm going to walk you through some of the most popular ones. So let's jump right into it. All right, number 1, increase your tax write-offs. One of the best parts about owning a business is that you have complete control over your tax write-offs. The tax law allows you to write off almost anything as long as it is an ordinary and necessary expense for your business, which means that if you incur more business expenses, you will also have more tax write-offs. And if you have more tax write-offs, you will pay less taxes on your next tax return. This is because the amount of taxes you pay are driven by your income, and tax write-offs reduce your income, which means it also reduces your taxes. Now, you may be wondering, why would anyone incur more expenses to save on taxes? Why would anyone spend $1 just to save 25 cents in taxes? Well, if you spend the dollar on junk and it does nothing for your business, your income, or your life, then I would agree that this is a dollar wasted. But if you spend the dollar on something that will grow your business, grow your income, or make your life easier, then it may make a whole lot of sense. So I would never spend $1 to save 25 cents in taxes. Instead, I would spend $1 to earn $5 more in the future while benefiting from the tax savings of that spent dollar. It's an investment. And the more you invest in your business, the more you can benefit from writing off expenses associated with your investment. So if your goal is to reduce your taxes for this year, I would urge you to think about various ways you can reinvest back into your business before December 31st. You could simply spend more money in advertising and marketing, or you could hire consultants or invest into training to improve your business skills to run your business. Or you could buy assets like equipment or even a business vehicle that may be beneficial for you. What you choose to spend money on will depend on what your business needs. But I am here today to tell you that if you want to reduce your next tax bill before this year ends, spend the money before December 31st. The logic is simple. If you don't need the money to live, to support your family, or to put towards a big purchase, then why do you want to pay tax on it? And reinvesting money back into your business is just one big way to avoid paying tax, but it isn't the only way. If your business does not need any more capital, then consider the next point here. Number 2, make tax smart investments. Certain investments can tremendously reduce your tax bill, and in some cases, it can wipe it out completely. You can accomplish this by carefully choosing what you invest in and how you invest in it. Whether it's real estate, stocks, bonds, notes, and so on, there are ways to structure these investments into these types of assets to significantly reduce your taxes. Let's look at a couple of examples here. Let's start with real estate. Real estate is one of the best tax shelters in the world because the tax law allows you to deduct depreciation on your rental properties. And because of this depreciation, it is very common for real estate investors to report tax losses on their tax return, even though they may be cash flow positive. So here's a game that many business owners play. They earn a lot of income from their business and use real estate losses to reduce their taxable income and their taxes. Now, there are several rules involved and criteria you have to meet to successfully accomplish this, so make sure you subscribe to our channel to learn a little bit more about this. But for now, let's move on to some other investments like stocks, bonds, notes, and so on. So another time-tested tax shelter that you can use to invest in these types of assets are retirement plans. You can get a tax deduction for every dollar you contribute to a retirement plan up to a certain limit. Now, different plans have different limits, and some structures have higher limits than others. For example, there are ways to contribute upwards to $300,000 in a single tax year towards your retirement and deduct the entire amount from your taxable income to pay less taxes. You could accomplish this through various retirement accounts, pensions, or other retirement structures. Now, ultimately, you can choose the contribution amount that you are comfortable with. But the main point here is that if you are going to invest in anything, make sure you use a structure that will save you the most amount of money in taxes. And once again, I am here today to tell you that if you set this up before December 31st, you can use these investments to reduce your taxes. But maybe it's too late for you to consider any new investments, whether that be your business, real estate, or the stock market. And if that's you and you have very little time to make something happen, there is still one little trick you can do here. Number 3, prepay expenses or delay revenue. Now, this may sound a little silly at first, but stick with me here for a second. So your taxes this year will be based on your income as of the last day of this year, right? And your income as a business owner follows this very simple equation. Revenue minus expenses equals taxable income. So if you have more expenses, you have less income to pay taxes on. Or if you have less revenue, you will also have less income to pay taxes on. And of course, our goal here is to pay less taxes in this tax year, right? So here's what you can do. And this strategy is all about timing. So if you use the cash basis accounting method, then you would record revenue when cash is received and record expenses based on when you paid cash, not when services are rendered or when goods are delivered. And if you do that, then you could time your expense payments and your revenue receipts to reduce your taxes. First, you could accelerate expenses you already have before the year ends. You can easily do this by prepaying expenses you expect to have next year, in this tax year. I've seen people do this with various subscription services or other expenses they know they are going to incur in the next year. By prepaying them, you create an expense this tax year instead of the next tax year, which is going to immediately save you money on your next tax return. So if you want to reduce your next tax bill, think about expenses that you can prepay for before this year ends. Then second, you could also delay incoming revenue. Let's illustrate this concept with an example. So let's say it's December 30th and there's a $10,000 check on your desk. Do you deposit it on December 30th or January 1st? Well, if you deposit it on December 30th, then you will pay tax on it for this tax year. Whereas if you deposit it on January 1st, you will pay tax on it for the following tax year. So the difference of just 2 days here just pushed your tax on this payment 365 days into the future. So if you want to be extremely savvy, you could time when you bill and collect payment from customers, whether it's through invoices, checks, or your merchant provider. I would only consider something like this at the very end of the year. The closer you get to December 31st, the more you may want to consider a strategy like this. Drop a comment below and let me know what you think about this. And by the way, if you want a comprehensive tax plan that is guaranteed to save you thousands of dollars in taxes, then consider applying to become a client of mine today at mycpacoach.com.